concerned with the introduction of MPSA 17. The practice of public sector accounting is very important to ensure transparency, accountability, and efficiency in managing public resources. Where in Malaysia, we have moved from a cash-based to an accrual-based accounting system, a major reform to align with international standard under IPSAS. To support this, the Accounting General Department developed the Malaysian Public Sector Accounting Standard, or known as MPSAS. Among them, MPSA 70 is significant because it governs the accounting for property, plant and equipment, which are assets like buildings, vehicles and infrastructure used to deliver public service. This standard promotes transparency and efficiency in managing government assets. Under MPSA 17, property, plant and equipment or PPE are tangible assets used for operation, service or administration and expected to be used for more than one reporting period. It covers items like roads, bridges and even some heritage assets, although heritage items can be excluded if their value cannot be measured reliably. Assets are recognized only when the future benefits are probable and their cost can be measured reliably, ensuring that only qualified assets appear in the financial statement. When first recognized, PPE are measured at cost, including purchase price, tax, and directly related costs. If the asset is acquired through a non-exchange transaction, it is measured at a fair value at the date of the acquisition. After that, entities can choose between the two cost model or revaluation model, where in the cost model, which carries asset at cost less depreciation, or the revaluation model, which records them at a fair value. But consistency must be maintained within each class of the assets. Each significant part of an asset is depreciated separately to reflect its actual use. When an asset's carrying amount is higher than its recoverable amount, it is considered impaired and the loss must be recognized immediately. An asset is derecognized once it is disposed or no longer provides service potential, and any gain or loss is reported in the statement of financial performance. Finally, MPSA 70 requires a detailed disclosure, such as measurement basis, depreciation method, useful life, and reconciliation of carrying amount to enhance transparency and accountability in public reporting.
Positive accounting theory, or PAT, focus on explaining what actually happens in accounting practice rather than what should happen. In the context of MPSA 17, PAT helps us understand that this standard wasn't created just to sound good on paper. It emerged as a practical response to the real challenge faced by Malaysian public entities. Before MPSA 17, many government agencies struggled with issues like inconsistent asset management, unclear valuation methods, and weak asset stewardship. Auditor General report showed that these weaknesses often led to inaccurate reporting and accountability gaps. PAT tells us that such changes in accounting standards are driven by real needs and behaviors. When public agencies consistently face this problem, regulators recognize the necessity for a clear, structured framework. It also explains why different ministries adopted MPSA 70 at different speeds, because factors like managerial incentives, internal capacity, and enforcement influence the decision. So overall, PAT shows us that MPSA 17 didn't arise from theory alone. It was the practical solution to recurring real-world problems, aligning everyday behavior with better accountability outcomes.
Normative theory is a prescriptive approach in accounting, meaning it tells us how accounting should be done. It focuses on ideal principles, serving the public interest and promoting transparency, comparability, and accountability. Essentially, it guides organizations toward a better practices, even if these are not yet widely adopted. In the public sector, before MPSA 17, asset records were often unreliable, valuation was weak, and recognition of assets was inconsistent. Normative theory support MPSA 17 because it encourages consistent and ideal accounting practices, improve transparency, aligns Malaysia with international standards like IPSAS 17, and promotes better management and safeguarding of public assets. In conclusion, MPSA 17 reflects normative theory by prescribing the best way to account for public assets, strengthening transparency, consistency, and accountability across the public sector.
The third perspective, regulatory theory, focuses on the role of institutions, government, and professional bodies in creating and enforcing accounting standards. It views standards as tools of control meant to achieve policy objectives like transparency. In the case of episode 17, this theory helps us understand how AGD and the PSASC adopted and adapted IPSAS 17 for local use. IPSAS 17 was first issued by the IPSSB under IFSC. Malaysia then used a delegated regulatory process where the HD localized the standard, while the PSSC act as intermediary regulators to adapt it to the Malaysia context. Although the adoption of IPSAS 17 was positive, it also exposed practical challenges, such as issues in recognition, derecognition, and measurement of assets. Malaysia's shift from the old PERS system to accrual-based MPSAS required major regulatory restructuring to align public sector bodies with the National Adoption Roadmap. Overall, regulators do more than provide technical guidance. They signal the government commitment to accountability, efficiency, and public trust. Global pressures for transparency under the IPSAS framework also encourage Malaysia to align with international standards. In conclusion, regulatory theory helps explain how formal control is established. MPSAS 17 can therefore be seen as a regulatory intervention that transforms observed issues, such as inconsistent asset reporting, into enforceable standards that promote uniformity across the public sector.
Assalamualaikum and hello everyone. My name is Aina Sofia Binti Aizat and my metric number is 301366. Today, I will be presenting about the main parties that involved in the development and formulation of the Malaysian Public Sector Accounting Standard or MPSAS 17, Property, Plant and Equipment. All these are the parties that involved in the development MPSAS 17 from international level to national level. So now, let's begin with the international level. The first main body involved is the International Public Sector Accounting Standards Board or IPSASB. The IPSASB is responsible for formulating and issuing the original international standard known as IPSAS 17 in December 2001. This standard became the foundation for Malaysia's own version, which is MPSAS 17. The IPSASB develops accounting and sustainability standards for public sector entities around the world. It operates under the International Federation of Accountants or IFAC, which helps manage and support IPSASB's operation. In Malaysia, the Accountant General's Department AGD play a crucial role in adapting, preparing and issuing MPSAS 17 based on the IPSAS framework. AGD ensure that the standard fits Malaysia's legal, regulatory and public sector environment. To strengthen the process, AGD established two main committees, the Government Accounting Standard Advisory Committee or GASAC and the Accrual Accounting Steering Committee or ACSC. The GASAC acts as an advisory and review body that gives technical input and professional advice before a standard is finalized. It includes members from State Treasury, Ministry of Finance, Auditor General's Office, university and professional accounting bodies such as MIA, MASB, ACCA, MICPA and CPA Australia. This diverse membership helps ensure that each standard is transparent, comprehensive and consistent with international best practices. The ACSC, on the other hand, serves as an approval and oversight authority. It is led by the Accountant General of Malaysia and includes senior directors and chief accountants from federal ministries. This committee ensures that every MPSAS standard, including MPSAS 17, is properly reviewed, approved and implemented with strong leadership and accountability. To conclude, the successful development and implementation of MPSAS 17 is the result of collaboration between international standard centers, national authorities, academia and professional accounting bodies. This teamwork ensures that Malaysia's public sector financial reporting is transparent, consistent and aligned with international accounting standards while meeting local needs. That's all from my part. Now I will pass to the next presenter. Thank you.
Now, I will continue the presentation about nature of MPSAS 17. MPSAS 17 is a principles-based accounting standard, which means it gives guidelines rather than strict rules and allows accountants to use professional judgment. This is useful because public sector organizations vary in size, operations, and types of assets. Organizations can choose either the cost model or the revaluation model to value assets. For example, roads or water systems need different methods than office buildings. This flexibility helps accounting reflect the true value of assets and how they support the services. However, it also requires skilled accountants to make judgments on useful life, depreciation, and impairment. Many Malaysian public sector organizations face challenges due to limited training and technical knowledge. Overall, MPSAS 17 improved the quality and reliability of financial reporting and helped increase accountability, transparency, and good management of public assets.
Today, I will explain the key limitations of MPSAS 17, which is the standard that governs how public sector entities record and manage their property, plant, and equipment. Although the standard is comprehensive, there are several practical challenges that affect the consistency and quality of reporting. So one major limitation involves heritage assets, such as historical buildings and monuments. Under MPSAS 17, these assets are not required to be recognized, even if they meet the definition of PPE. If a government decides to recognize them, they must disclose certain information but can choose whether to apply measurement requirements. Because heritage assets are unique and difficult to value due to the irreplaceability, legal restriction, and uncertain useful life, this leads to the inconsistent reporting among governments. For example, states like Malacca and Penang with large heritage holdings may present very different information. So another limitation relates to asset valuation. According to a 2024 study by Yusri Huzaini and colleagues, public sector entities face difficulties in identifying, valuing, and managing assets. This is because many public sector's assets are specialized and have no active market. As a result, entities often rely on estimation methods such as depreciated replacement cost. However, these methods can be subjective and may not reflect the true economic value of the assets. The need to choose between different valuation techniques adds a further complexity for this. MPSAS 17 also introduced challenges in depreciation. Entities must depreciate each significant component of an asset separately, which requires detailed asset breakdowns. These are also required to review the useful life and residual value of these assets every year. This not only increases the workload for asset managers, but it also can lead to depreciation charge that appear high or unreasonable, especially when the asset is idle but still needs to be depreciated. Lastly, another practical limitation arises from the technology and infrastructure. Although MPSAS 17 outlines the accounting principles, proper application requires a strong system to record and track the PPE accurately. Without a modern asset management system, entities may rely on manual or paper-based records. This increases the risk of errors and makes it difficult to monitor assets condition, usage, and maintenance. As a result, audits become more challenging and the accuracy of financial statements can be compromised. In conclusion, while MPSAS 17 provides a strong framework for accounting for PPE, it has several limitations in this practice, and these include issues with heritage assets, valuation challenges, complex depreciation requirements, and the lack of supporting asset management system. Thus, understanding these limitations is important for improving asset reporting and strengthening the public sector financial management by implementing some suggestions and also the recommendation to this limitation from our team.
Assalamualaikum and good day everyone. My name is Muhammad Aufi bin Wazir 301380. Today, I will briefly present the suggestion and recommendation to overcome the limitation in MSAS 17, focusing on 4 areas: heritage asset, asset measurement, and valuation, depreciation, and technology and infrastructure. So, one by one. Number 1 is heritage asset. For heritage asset, financial information alone is not enough to show their cultural and historical value. So, it is recommended that entities provide descriptive reporting in the notes to the financial statement. These include photos, historical background, and location details to improve transparency. Next, the Accounting General's Department should issue standardized guidelines on how to value heritage asset. This ensures consistency across all agencies and states. Management must also apply clear accounting policy when recognizing and disclosing these assets. Number 2, asset measurement and valuation. To solve valuation issues, it is suggested that AGD set up centralized valuation guidelines supported by professional valuers. These ensure that valuation use reliable methods such as depreciation, replacement cost, and fair value hierarchy. Government agencies should also invest in digital asset management system. A centralized digital asset register will help keep asset information accurate, updated, and transparent. Number 3, depreciation. For depreciation, issues arise when assets are idle or underutilized but still incur for depreciation. To address this, entities should introduce a clear internal policy on how to treat idle assets. This ensures depreciation reflects actual usage, making financial reporting more accurate and preventing overstated expenses. And the last one is about technology and infrastructure. The government should strengthen technology and infrastructure by adopting modern systems for tracking, valuing, and updating assets information. This improves efficiency and supports better compliance with MSAS 17. So, in conclusion, this recommendation is better reporting for heritage assets, standardized valuation, clearer depreciation policy, and improved technology. It will help enhance accuracy, transparency, and consistency in public sector financial reporting. So that's all for me. Thank you.
To conclude, MPSA 17 strengthens accountability, transparency, and consistency in Malaysian public sector reporting while aligning with IPSA 17. Through the lens of positive, normative, and regulatory accounting theories, the standard reflects Malaysia's effort to improve the asset management and fiscal transparency. Although there are challenges such as heritage asset valuation and complex depreciation, continuous training and digital system can help in addressing these issues. That's all from our group. Thank you.